Welcome everyone to this edition of the Master Implementers interview, right? So today we have someone actually I've been wanting to get for a long time, right? But I think with schedules and whatnot, right? We finally managed to get it, right? And it's such an opportunity. I think right now it's 2020 October, right? So I'm very excited to have Mr. Jonathan Ang to come on board the Master Implementer interview, right? So hi John, thanks for coming on board, right? And I would like to share a bit about yourself, just a brief story about what you do, right? And how do you get to where you are today?
Yeah, so I think for folks who don't know me, I'm actually doing full-time, I'm actually a full-time investor. So what I do is actually look for companies that can grow really well, companies that are disruptive, that are very innovative. And we tend to want to invest in these companies because they grow really quickly. And when we say quickly, it's not just 10, 20%. These companies are growing more than 40%. And in some cases, some of these companies that we're looking at are growing at 80%. So a quick, I would say, introduction about myself. I actually help people get better investment results. I help people to do investing in the right way. And I have this vision. And this vision is actually pretty much inspired by Bill Gates, right? Bill Gates, when he first started, he wanted to put one personal computer in each household. And that was something that was seen as a very noble vision. It was seen almost impossible. But look at today, I think, in fact, we have more than one computer per person in some cases. And for myself, I want to put one investor in each household so that, I firmly believe that, once a person in the household knows how to invest, right, the family finances will be taken care of. And once we take care of people's finances, we put the money worries aside and take it out of the equation, right? People can really truly live the life they want. And, the exciting thing is they're going to work because they want to and not because they need to for money, right? So that is where I feel that, with this vision, we can actually make the world a happier place, right? And, some people told me, money can't buy everything, money can't buy happiness, but come on, let's be realistic, right? I mean, if you can't put the money equation out of the picture, then people are going to live in survival mode, right? That's where they are actually in the most unbeautiful state. That's where, they might not make the most best decisions for themselves in their lives.
Yeah, I love. So thank you for sharing the intro, right? So I agree with what you said, right? Like, yes, money might not be everything, right? But sometimes, right, I think there was a saying I think I heard from Dean Graziosi said, right? Like, if money can solve the problem, right, it is not a problem anymore, right? So then there's things that money can solve, so many things, right? So John, so one thing about John, right? So I attended he's one of the co-founders of the Growth Investing Mastery, right? Greg Halvesta interviewed a while back, and one thing about me that really struck me, right, with John is that he's really authentic and he really loves to serve. He really wants to help people, and his vision is great, right? Putting at least one investor in every family household. So I love it, right? So, like John, like how did you come about to getting that kind of vision and desire? Because for someone your age, right, and with your background, you can share a bit more if you want, right? Like how do you get to that level of desire? Because it's definitely not common, right, for someone your age to want to have such a big and huge vision. So can you share a bit about like maybe in terms of how you started even wanting to invest in the first place, your growth as an investor, right? Just for the audience to know as well.
Right. So it's a very interesting journey because it all started when I was in junior college. That was when I was about 17 years old. And back then, I was really driven to earn money, right? But I didn't know my calling was in teaching. I didn't know that my vehicle that I'm going to use is specifically growth investing. I just knew that I want to make a lot of money and I want to do well in life. So I think I communicated that pretty well to my friends, that I really want to go somewhere in life and I wanted to be rich. So that's where when one of my friends came across this investing seminar, she actually invited me and said, why not let's go together. I still remember that night, it was really scary because it was the first time when you went to these seminars and you're the youngest kid in the room, right? Everyone around you is like 40, 50 years old. Okay. And it was pretty much intimidating, right? And for us, for us, it was really an eye-opener because we really knew nothing about, wanting to make money while you sleep. Or, we didn't even know about the concept of passive income. Really, that means making money without you having to spend time to work, right? So basically, money is working for you. So that really attracted me because back then I really loved computer games, and I thought how great it would be if I could just, get my investments right, make money, and I can play computer all day, right? So just let you guys know how crazy I was as a gamer. I'll play 2 to 3 days straight. And, you know, there was one day where I wanted to really break my record. So my record was playing non-stop for 24 hours. So I wanted to do 48 hours. And, you know, I think throughout, 36 hours into it, 1.5 days throughout it, you know, my nose started bleeding, and that's
Oh
where I stopped.
wow.
Yeah, that was how crazy I was. Yeah, so from there, I kind of have a touch of investing, and that's where I grew really, really interested in it. And during the period when I was in the army, I had more time to find out more about investments, and that's where I got to know about value investing, and that's where I got to know Calvin as well. And from there, he actually introduced me to the world of growth investing. And since then, you know, I actually got my results. And that was when I was in university, right? So army was about 18 years old, and it took me a while to figure things out. And when I was in university, when I was about 20 years old, yeah, year one was, army is 18 to 20. And when you come out from army, that's about 21 years old, right? So that's where, you know, I was in university. So in university, I was very, I was feeling a bit frustrated because what I saw was that my peers are all chasing for the grades, right? I mean, it would be understandable if they want to be a doctor or they want to be a lawyer, right? But my school is an engineering school, and you know, I know that friends around me, they do not really aspire to become professionals, right? They're pretty unsure where they want in life, and you know, but they're just chasing that paper, that grades, you know, getting their A's. And I was just thinking, you know, what's the next stage after university, right? It's the real world, it's work, right? So you know, and I actually read a lot and I hear a lot from seniors that, you know, don't really just chase the grades, because by the time you go out to work, right, how are you going to score and how are you going to differentiate yourself when you have a skill, right? So you really want to develop these skills. So that's where I really joined competitions. I joined hackathons, right? I went to case competitions, and that's where I actually I was very fortunate to have a very good team, right? So in 3 months, we actually raised $40,000 in cash by winning, I think, 5 competitions in 3 months. Oh yeah, man, it was really
crazy.
a crazy hustle. You know, we actually slept at 3 a.m. every day, then we go to classes the next day at 7 to 8 a.m. I didn't know how I did it, but you know, we just did it. And after that, we got really burnt out, and you know, I just crashed. Then I realized that, you know, I actually, you know, my pursuit of really working hard has always been about money, right? It wasn't really much about, you know, it wasn't really much about passion. So I decided that, you know, rather than, so that was end of year one in university. So I was thinking, like, rather than just continuing university, you know, just really clearing my examinations, just getting the degree, why not let's just try taking a gap year and see what I want. And it was pretty scary because, you know, taking a gap year or taking a sabbatical would mean that I'll graduate 1 year later than my peers, right? But then I just kind of reasoned myself. So I came across this thing that was introduced by Jeff Bezos. So he talked about this framework called the regret minimalization framework. So basically, what this means is that imagine yourself, right? Let's say if you're to pass away today, or if today you just walk out the road and you get banged by a car, right? What is that one thing that you regret not doing? Well, so I think, and I was like, maybe one thing that I regret is really not knowing what I want in life, right? And that's where I really set my purpose of life is to understand what's my purpose of life. So that was what that 1 year was for. And it wasn't an easy decision because if you guys listen to my podcast, I mean, for people who know me, right, in fact, it was more of like I take a sabbatical and I take a gap year, then I tell my parents, right? I mean, coming from an Asian family, you know, your parents want you to get your qualifications, want to get your degree. So when you tell your parents that, you know, you're going to take a year off from school, they will jump, right? It's as if like a 10.0 magnitude earthquake just happened and it just shook my entire life. So, you know, I just did it because I felt like, back then I was 21 years old. I felt that, you know, if I had to make any decisions, it has to come from me, right? I mean, I have to stop taking decisions or making decisions based on what people say, right? Or because I mean, ultimately, this is my life, and I don't want to go down to my grave and end my life and sit on my coffin and, you know, blame people for things that could have been, right? That shouldn't be the case. In fact, if anyone has to be blamed, it has to be myself, right? If I didn't take that call. So I really took it as, you know, I'm an adult now. I have to think like an adult. And if I want to be successful, then it is me, right? Everything's on me. Whatever mistakes I make, whatever failures I have, it is on me, right? It's not on anyone else. So I took it upon that, this is something that I really wanted, and I will bear whatever mistakes or whatever ramifications that may come with it. And during that 1 year, what I did was that I actually interned in a company that actually teaches people how to invest, right? And that really helped me, and that really gave me opportunities to speak, right? So I was very fortunate to have a really great mentor back then, and his name is Sean Xia, and I really appreciate him, even till today, because without him, without his opportunities that he gave me, I wouldn't have been able to really find out that, hey, actually speaking is something that I really am passionate about, and teaching is something that I really like, right? It's really very different, because back then I just really blindly I wanted to make money, but when I started helping people get the investment results they wanted, suddenly it has a meaning behind it. It's not just about making money, right? Because let's say if I have to help someone who's in his 30s or 40s make money, right? This money is not just money, but this money could be someone's kid's college education. It could mean that this person can help his wife or his other partner, to actually retire and take care of the kids, right? It could really mean helping someone to leave his or her job 5 years earlier, 10 years earlier, or leaves a job that they have hated their entire life.
For a long time.
So this is something that is really way beyond myself, right? It felt like I was going for, I had a higher calling, and having the Christian faith, it also made me feel that maybe this was God's calling, right? I may not be the best person in church. I may not be, I may not be a pastor. I may not be I may not be registering in cell groups. I may not be an usher, but maybe this is my calling, right? This is my way of helping the world, to serve the world. So I decided, even though after that 1 year of
gap year,
I wasn't making big money, right? In fact, I was being paid $500 a month. As an intern, right? And I was working almost 6 to 7 days a week. I really fully immersed myself because I wanted to learn so much, and the pay really didn't matter to me. And after that 1 year, to be honest, I felt a bit anxious because you told your parents that you want to do something great in life, and suddenly you have no money to prove it, right? Asian parents are very more practical. They want to see you making money and everything. So that's where Kelvin and I, we actually started our own company, and that's where we decided, wanted to do things ourselves, and we wanted to kind of dictate the culture that we have, the community that we have now, which is called, the GIM community, which is a Growth Investing Mastery. And ever since then, I never looked back, and this was really the journey that I had. With regards to how I found out, I just think everyone has this little X factor in them, or this unique thing in them, and you just have to find it. There's no specific framework, and the only way to find out is to really be intentional about it. Like, you want to be intentional about what your purpose is, finding out what your purpose is, and be it that will mean taking a gap year, or really just taking a break to find out what you really want in life. I think a lot of people, they're just so busy that they just get caught up, and only 10-15 years later they find out that they're actually not doing what they enjoy doing and what they want to do. So I think for people who are feeling lost, that's my advice, right? To really have that leap of faith and think about it. You're really not missing out much. I mean, let's say if you're 20 plus years old, 30 plus years old, come on, the life expectancy is kind of like 80 over years old now. What is that 1 or 2 years going to mean to you? It's going to be like 1% or even less, 1+% of your life. And is it worth investing 1% of your life to find out how you're going to spend the next 20, 30 years of your life? Right? Absolutely yes. In fact, I'll be killing myself if I didn't take the gap year.
I imagine.
Yeah, man. I could have. I would have been thinking. I should have been doing this. This could have happened. This should have happened. What if? I'll be living with all this what ifs and
regret.
I'd rather fail and have that certainty that what if wouldn't be there. That wouldn't have happened. Then not doing it and not failing and I would just keep thinking, what if I've done this? Could I have been successful, or could I have lived a more fulfilled life?
Wow. Thanks for sharing. I think there was a lot of great points inside, right? I just want to get a few things I pointed out. I think number one is, I think you really showed power of immersion and environment, right? Because you chose to intern at a company. Yes, maybe they might not be paying you so much, but it was, I think, through there, right, you were able to speak, have opportunities to teach, right, to find out more about investing and to get surrounded with people like mentors like Sean Xia, also know him as well, right? And with the environment, right, really pushed you out during a gap year, right? Which I think some people would say that sometimes even this sort of education is way more important than just a traditional piece of paper, right, in a degree, right? And I think
Yes.
secondly, I think is for you, you really took ownership, right? You took ownership of your own life, right? You decided not to play by anybody else's games or rules, right? And I think that's something that to be really, really to be called out for, because I think a lot of people, they are still living in that fear, right? Or they're living in expectation of someone else. But for you took ownership because this is your life, right? And you did it. And I think number three is instead of trying to keep thinking your own head, right? To do the things that you want, right? To do the things you like, you actually went out to try it for yourself to make sure that you minimize that kind of regret, which you said, and also in terms of taking that leap of faith, right? Because ultimately, right, it's only when you start going out and doing more things, right, which is then you really find out what you really like. So thanks, John. Right, I think those are powerful stories that, especially for people, I think the audience, we have some investors as well, but also some people who are thinking of trying to start out a new thing, whether it's a side hustle, a new business, or a new career. I think this can be really, really useful for them, bro. So yeah, so John, I was thinking about your next phase, which is your current phase actually, right? Like right now in terms of running a company, right? Firstly, your business partner is a friend, right? So I think some people may just be interested to find out like how did you guys coexist, or how do you guys manage to thrive, right? Because growth investing mastery, I think to me right now in the space is one of the most fastest growing, or in terms of the product, the service you guys are delivering is absolutely quality, right? I absolutely love it. I'm part of the community as well. So how is some of your like you feel like in terms of your mindset and perspectives, right, that really has helped you and Calvester, right, to really grow Gym to where it is today? Can you just share a little bit, right, just for some of the people out there to know as well?
Right. I think in a sense we kind of have an unfair advantage because what we have been doing is we've been studying the most successful companies in the world, right? We are looking at these high growth companies, and when you study these companies, these CEOs will actually be talking about in their business transcripts, what's their plans. And we ourselves, we have actually flew down to the US, to China, to meet the CEOs themselves. And, this actually gives us kind of like, I would say our North Star of running the business. This kind of like the ideal business that we want to basically replicate, right? So businesses that can scale, businesses that are well run, have systems, how businesses actually retain talent. In fact, every time we meet a CEO, we will ask, how do you retain your talent? Right? Not because we want to be want to answer hard questions, but we ourselves, we also want to know how can we actually improve better. So
Nice.
having this unfair advantage, if someone wants to run a business, I would say, if let's say you want to run, for example, an apparel company, right? Go and intern in a startup that's doing that, or go and intern in a company that has been successful in doing that, so that by the time you come out and when you start out yourself, you'll know the exact way, right? Because I think most people waste so much time on failing, right? They fail, but these failures could have been avoided if you intern in this startup. So I would say if you want to start a business, don't really start it first until you have interned in a company. And interning in a company that does what you want in the future, right, is also a way for you to know that if this is really your passion. Because after 3 months or 6 months, you kind of feel burnout, you feel this is not for you, then maybe this is something that you don't want to start up, right? I think one thing really helped was that Kelvin and I, as much as we need money to run a business because we have headcounts, we have to do pay for rent and everything, the main purpose wasn't really for the money, right? I mean, Mark, you can attest to this, right? In our community, the way we run this is not super profit driven. In a way where, I mean, it sounds a bit counterintuitive, right? Like, you run a business, but you're not profit driven. It sounds a bit counterintuitive. But what we do is we really obsess over the customers. We really care about, whether if our customers are actually, getting their results. We really care, if what we are teaching or putting out there to our customers is this content that they want or they need. Right. So when we have this intent, right, whatever you do for your business, right, once you take care of your customers, once they are happy, you're able to retain them, then, you don't have to worry about the profits. The profits will come naturally. So a lot of people have this misconception, right? They design the business for it to be super profitable, right? But actually profits are a function of a customer success, right? Otherwise, if your customers are pissed off and you get a bad reputation, then
Yeah.
people are just not going to people are just going to post very bad reviews online, and you're not going to have a good time trying to basically do your
Yep.
marketing, because you have a bad reputation, right? It's going to be hard for you to make sales. So
Yep.
we really focus on our customers, and in the first year we didn't really obsess too much about the numbers, right? What we really wanted to do is to really set things in place, set the systems in place to make sure that our customers have the best experience, right? So I think having this customer-centric approach from the start, and knowing that this is something that we're going to do in the long term, right? Like when we talk about long term, it's not just like 1 or 2 years. That's not long term, guys.
Yeah.
Long term is 5 to 10 years.
Yep.
We are already in this for 2 years, and we see ourselves to be here in the next 10 to 20 years. And once you understand this, you understand that you're 20 to 30 years, then there's no rush in trying to grow your business. I think most of the time, people start to fail because they scale too quickly, right? When you scale too quickly, you're unable to support your customers can't get results, they will stop referring their friends. It's just a very simple formula. It's not some crazy formula we are talking about here. All right, I think why is it so hard for people to follow these blueprints? Because they're so impatient, right? They want to show the world that in a year they can make $10 million, $50 million, but it doesn't have to be that way, right? So I think what really helped us is that we really started this business with a purpose, with an intent of putting one investor in each household, one full-time investor in each household.
Yeah.
And once we got the purpose right, we focus on our customers, and we make sure that that is the goal that we want. And that goal hasn't been out from our drawing board since day one, right?
Wow.
So if you come to our community, right, the kind of people that we attract is also very, very different. Yeah, so this is how we run the business, and I think that is something that really helped us a lot along the way.
Right, for sure. I love what you shared, right? So I think a couple of things that I got out, I think would be very useful for the audience. I think firstly is, a lot of people, they want to start the business immediately, right? But the thing is, why not shortcut your learning curve, right? Accelerate your process, your learning journey, right? By actually interning in a company that's doing it or have done it before, right? Because you learn so much more, and hopefully you get paid at the same time as well, right? Whether it's a small sum, but I think that's something that you also did that would really help you as well. Calvester was around as well, right? And that right now is one of your, if I'm not wrong, it's one of your first ventures, right? It's your first venture, right? If I'm not wrong, GIM?
Yeah,
right?
This is my first business.
And it's doing so freaking well, right? Compared to other people saying they have to fail many times to do it, right? And I love what you guys said, right? Which I'm sure it was also inspired by Jeff Bezos, right? Or even Tony Hsieh from Zappos, which is like really focus on the customers, obsess over them, and that's how you create longevity in your business, how you think long term, right? And the thing is, a lot of people are rushing, a lot of people are impatient, but you guys are patient, and you guys are focusing on long term. And so with that, right, with the word long term, I want to focus more into your investment mindset as well. I think that's the audience, a lot of the audience will be interested as well. How has your investment style changed over the years? I think we know a little bit, you learn about value investing, right, a bit of options. So how has your investment style and mindset changed over the years? And maybe just share a little bit about your current investment methodology, right? Just for some of the people who do not know what you do right now.
Right. So basically, previously when I was in university, and even though I learned about value investing when I was 17 years old, but sometimes when you look at your friends, you see them doing day trading. So back then when I was in university, I had this roommate, a really good friend of mine. We are still good friends. His name is Aiden, right? So I saw him doing day trading, and he was making like $200 in 10 seconds in front of my eyes, and it's 200 US dollars. So being very young back then, I was like 21, it kind of sparked my eyes, like, wow, what the hell, you can actually make $200 in like 10, 20 seconds. I'm like, wow, man, this is crazy, crazy stuff. So that's where I actually got sucked into the world of short-term investing. So I actually tried day trading, futures, forex, options, whatever you think of, whatever you try, day trading, swing trading, momentum trading, I've tried it, right? And I realized that personally for me, just speaking for myself, it is pretty tough to do short-term trading because you have to be very active, and it is something that is really hard to replicate. So what do I mean by that? For myself, let's say if I to make 100% returns on a trade today, right? I can't repeat that 100% for the next 10 years, 20 years, 30 years, 40 years, right? So, I mean, you guys can just do the math, right? I rather make 20% returns consistently over 10 years than make, 100% for 1 year, then the next year I just, lose everything. So that's where I actually got humbled, right? Because I mean, at a young age, you learn about value investing. You get to people tell you have to be long term. You start at a young age, and just be consistent. You know that it is right. You know in your heart it is right, but somehow when you look at the fast money, it's just very tempting. And sad to say, I think even for myself, sometimes humans, we have to get burnt, or we have to lose a bit of money or lose a bit of skin. Only then we can internalize the lesson or this learning, right? So that's where I really understood, what if, that's where I really figured out, what if I were to just invest in the no-brainers like Facebook, Master, Visa when I was 17 years old. I'll be making so much money right now, right? I'll be making tons of money. So I just told myself, right, why not let's just focus on growth investing? And that's where I met Kelvin. And ever since then, my philosophy has changed from being short-term to actually very, very long-term. So I look at buying stocks not as lottery tickets. Some people look at it as lottery tickets. I look at it as kind of like my piggy bank, right? When I invest into companies, I'm actually putting money into my piggy bank. In fact, it is even better than my piggy bank, because when you save money and you put it into the bank, it is a guaranteed loss, right? Because your banks are paying you lesser than 5% interest, and inflation is at 5%. So when you put money in your bank, it's a guaranteed loss. I mean, it sounds very counterintuitive to most people, but when you look at it, if you understand inflation, and if your banks are paying you less than inflation, it's a guaranteed loss, right? But what I'm doing is I'm actually a capital allocator of my life. So when I look at myself, I'm a CEO of my money, right? So should I put money in the savings department? Should I put savings in the stock department? Should I put savings in my insurance department? How should I allocate my capital? So that's how I think about how I allocate my money, right? And of course, when I put money into investments, I want to put money into companies that can grow really, really quickly, right? So think of stocks as fixed deposits, right? Just that stocks do not tell you or guarantee you, how many percent will you get in a year, right? So you want to put your money into fixed deposits that that can potentially give you the highest return, right? So that's why investors get rewarded so much, because you give up on that kind of a bit of certainty, right? Because fixed deposit, you are guaranteed 1% or 2% a year, but for investing, you give up that certainty, and you have to analyze and do the homework for yourself. And what I do is basically I invest in companies that are growing at more than 40%. So when I talk about growing more than 40%, I'm not saying the stock prices are growing at more than 40%. I'm saying the company, the real business itself, right, is growing its revenues, it's growing its earnings by 40%. So a lot of people, I guess, they are so caught up with, this gambling mentality that they don't realize that buying stocks is actually buying a piece of ownership. So many times, I have friends in university that tell me, John, the rich always gets richer, the poor gets poorer. How sure are you that you can actually make money? But I kind of disagree with that, because we have one of the most best invention in history, right? And that invention is the stock market. Why? Because let's look at the world's richest people in the Forbes 10 list, right? These are all people who are either long-term business owners, right? So we have people like Amazon, Jeff Bezos is the richest, and we have Microsoft, right? These people are basically founders of their companies, and they're shareholders of their companies, they're stock owners, they're investors of their own companies, right? You also have things like your Walmart, right? Your Walmart brothers who top the charts, right? So I can go on and on. LVMH is also on the Forbes 10 list. So if you want to prosper together with the rich, then own the company that they are getting rich with, right? Own the company, and from there you can actually be as prosperous as them. As you get richer, right, you get rich together with them. And the amazing thing is that you don't have to put a single amount of effort to run the business, right? So think about it, right? Today, if you run your own business, the chances of you failing is very high, right? But what if you already know that these successful people has been killing it? They've been killing their competitors for the past 20, 30 years. Then why don't you just invest with them? Keep it no-brainer,
Yep.
So I always like to tell my people, right, even though, let's say if you don't believe that you can start up a business, you don't believe that you can be a good CEO, it's fine, right? What you can do is you can be an investor. So rather than be the biggest and most fiercest shark in the tank, in the fish tank, right?
Yeah.
What you want to do is be the person outside the fish tank, and you want to choose the best sharks to fight for you. Yeah, so that's how I see investing. And basically the idea of the rich getting richer and poor gets poorer is really just absolutely it's not true, right? If you understand how to invest and if you are in the stock market.
Yeah. Wonderful, right? So thank you so much for sharing, like in terms of how your investment mindset has grown and how it is you right now, right? Which is, I think, something that's going surprise some people, right? Some of them might know of what Jim does, some might not, right? Is the fact that you guys only like want to look at companies that grow more than 40%. Right, for some people, like, hey, right, that kind of goes against with what we learned from value investing and whatnot, right? So we just like to share a little bit about a bit more about the strategy, right? Just one or two things that you feel that is going to be very important when looking out for such companies, right, to go on. And actually, I would just like to seek a bit of a perspective you could share, right, in terms of how most people approach options trading and investing, and what are some of the potential drawbacks and all. I think we have discussed it before, right? Like, just to share a little bit about that as well. So maybe just a little bit on both, right? And then we can move on to the next segment as well.
Okay, so answering the first question, growth investing, I feel that if you're not doing growth investing, likely you are not. I would say growth investing is the biggest margin of safety we investors can have, because really, if your companies are not growing, what it really means is that um, they are actually getting phased out by competition. They are becoming irrelevant, right? That's why they can't, have more. They can't increase their earnings, right? They are actually losing their market share to their competitors. They are becoming market share donors, not market share grabbers. So that's something that's very scary, right, for me if a company is not growing. And I think there's this misconception that growth companies are volatile. Growth companies are more risky. And I just think that we have to clarify this, because it's bullshit. Like, it's seriously, it's crazy. It's making me go crazy when people think like this. The reason why people will tell you this is because bankers don't want you to succeed. Bankers want you to believe that way, because if you do not believe this, then you'll be managing money yourself, and they'll go out of business, right? So they want you to believe that investing is hard, but actually it's not really hard, right? Think about it, right? If you look at really no-brainer companies like Microsoft, right? There's no dispute that Microsoft is killing it, right? They're one of the biggest company, and despite being a $1 trillion company, right? I believe it has gone above the 1 trillion mark, right? So they are still growing at a freaking 15%. Right. If you guys understand, in the Singapore stock market, you don't really have much companies growing at more than 15%. And these companies in Singapore, they're not even huge, right? So by right, when you're small, it is supposed to be easier for you to grow, right? When you're so huge at 1 trillion, it's very hard for you to grow. So the fact that Microsoft can grow at 15%, right? They have they have zero debt. They can pay down their debt any single time. There's so much cash. Right. And I actually did an analysis, right? If today Microsoft to stop earning money, right, they stop getting sales, right? Then how long they can survive? They can survive more than 1 year, right? With zero sales, they can still pay no problem. Right. And if you ask, most of the Singapore companies, I don't think they can survive 1 year without sales coming in. So, if you were to look at Microsoft, growing at 15%, no debt, increasing their earnings, being the dominant player in terms of operating systems, in terms of ecosystems, right? How can we then say that Microsoft is a risky company, right? So it's absolutely nonsensical to say that Microsoft is a risky company just because it's growing at 15%. Right? Same thing goes for people like CrowdStrike, right? So for those who follow me on YouTube, this company is growing 80%. Does it mean it's risky? Absolutely not, right? In fact, CrowdStrike is actually stealing market share from McAfee. Right? So McAfee, I believe most of you guys know, is a very popular antivirus software. Yeah, and the fact that McAfee is not growing is well known. It is a very huge player, but it's not growing and it's losing market share. Does that mean that it is not risky? So, it's just crazy, to say that something is risky just because it is growing, right? I think we really have to understand what volatility is here. And it's undisputed that volatility do not mean a risk, right? So it doesn't mean that my stock prices drop. It means that I'm owning a risky company. So just to give you an example, early in March in 2020, we have this market crazy crash. The market fell by 30%. So Microsoft fell, I think, from $188 or $200 all the way to $130. Right? Does that mean that stock prices of Microsoft I think fell about 30-40%? Right? Does that mean that Microsoft has stopped selling their softwares? They stopped selling their businesses. They stopped selling their products and services? The answer is no, right? In fact, more people spent home during COVID, right? In fact, you saw a spike in Xbox revenues by 80%, right? You saw a spike in people buying Surface laptops, right? The Microsoft laptops and their sales increased by 30%. So, does this mean it's risky? Right? No, right? They are not closing down their stores. They're still selling. In fact, they're doing even better, right? During the crisis. So, we just have to really stop thinking that, falling in stock prices means that, companies are more risky. In fact, falling in stock prices means that it is less risk for you, right? Think about it. Imagine if today you were to buy a laptop, right? And someone sells it to you at $1,000. And if the salesman say, right, why not I lower the risk for you? I'm going to sell this laptop at $50 so that if it does work, as I say, it will work. Right, then good for you, right? Because you're getting a good deal. And if it doesn't work, right, you're getting it at $50 anyway. It's cheap, right? So I mean, you can afford to lose this money. So this is how we shop. This is how we think when we buy into our products and services, right? Our computers, our our handphones. Some people even do like 5-6 hours research or 3 days research just to think what kind of mouse to buy, what kind of electronics to buy. But when they go to the stock market, some of this thinking doesn't get transferred to the stock market. They don't compare, they don't do research. And somehow when stock prices fall, right, and when companies get cheaper, it is not seen as something that is less risky. So for me, I think very differently from most investors out there. When stock prices fall, I find that it's very, very safe and I'll enter, right, even though it has dropped by 50% or whatnot.
Yeah, I love what you told. I want to add on before you share a bit more about options, right? That would be interesting. But I also in March, right? I remember during a period of time, investors were panicking, right? They were asking for help, right? I know one of the stocks that Jim was looking at, right? We were looking at together, right? I think this stock was about $30, right? It went all the way to like $10, right? It was a 60% drop, right? I think people were like freaking out, right? But you guys were calm. You guys were asking the community to look at the business, and right now, hey, it's approaching $40 right now, right? So imagine you bought it all the way from 10 all the way, that'd be more than 100% return. So it really goes to show that once you find a good companies, right, you have a strong conviction, right? I would like to say, right? That's when the stock price goes down, right? You actually be celebrating and buying more, right? Because you reduce your risk and get a much better price, right? So John, right? So thanks for that. So moving on, right? Just want to share a little bit about your experience in options, right? I think just because I think our audience, at least my audience, right, a lot of them invest in options and all, but I do find that there's some level of risk, right, for a lot of them who are not so new. So can you just share a bit about your experience in options, right? And what would you recommend or advise investors to do if they really want to get into options for during this period of time?
Right. I would say for options, right, it is a tool that it is an icing on the cake. It really helps you boost your returns. It gives you cash flow. It really makes you feel satisfy these itchy fingers, right? You want to make trades. Because options are more short-term in nature. Obviously, there are long-term options strategy, but for me, why I say short-term, because to me, long-term is 5 years, 10 years. So for people who are looking into buying calls, right? I would say, if you want to, buy calls for companies, you should not have your buy calls concentrated like a call position, right? So a call position means, right, your buy calls shouldn't be making 15 to 20% of your portfolio. I want to share a story because, just be very vulnerable and upfront here. In fact, I want to share a story of myself losing 10,000 US dollars. Basically, what I did was, for you guys probably know that I look at this company called JD.com, right? So I don't know if you know about this, Mark. Back then JD had this scandal, right? So basically,
by the CEO,
they actually went through 2 scandals, which was very it was a very rocky period for JD. Right. So basically, firstly, it was a trade war. Right. When Trump got on, he announced a trade war, and all these Chinese companies really just started falling. And JD.com, despite guys, despite earning more money, right, despite increasing their profitability, increasing their margins, despite Richard Liu, CEO, being part of the Chinese Communist Party, he knows basically where the government wants, and this is important, guys. If you're investing in Chinese companies, you have to, if the founder is part of CCP, the Chinese Communist Party, only then I will feel I would say safe,
assured,
right?
More assured, yeah.
Yes, because it's always important for these big companies to move in the direction where the Chinese government wants to move to, right? It's kind of a bit of national service sometimes. So it's very important. So, having all these factors, business is improving, you have a great founder, the government is supporting JD. The government even hailed JD as the national logistics career, right? So, how can this company fail, right? It has a real product. When I went to China, I saw JD in action. We cross-reference with many of our Chinese friends in China. They were actually buying from JD. So this is not something that's kind of like a bubble. It's a real company serving real needs, having real demand. So the trade war came, JD fell from $40 over to $30. Then, the sex scandal came. Basically, Richard Liu, excuse me, Richard Liu was actually accused of, molesting or raping a girl, having sex with a girl. From there, the stock price plunged all the way to $19, in fact. And, I was owning the stock through buy cost at $40. So can you imagine, the stock price had fallen all the way to $20. And, even though I bought a long-term lead cost, right, long-term cost, but it wasn't enough for me to wait out, right? You think about it, your options are basically a 2-year period, and the entire saga lasted over 1 year, I think close to 2 years, right? So that's where I learned a lesson where if you really want to hold into a good company and you want to hold something long term, then just buy stocks and keep it simple, right? You will not have this drama and everything. However, so you shouldn't really put buy cost as like your core position, because you're going to get heart attack. So imagine next time, when you guys, how you invest right now should be how you invest when you have 100K, 200K, $1 million, $2 million. Your framework shouldn't change. Right? So I thought about it, can I really do this when I have a $1 million portfolio, $2 million portfolio, right? Or $10 million portfolio? Because you want to think big, right? So imagine putting let's say you have a $10 million portfolio, and imagine putting $1.5 million, 15% of your money or portfolio to buy cost, and seeing this buy cost just disappear overnight. I think this is something that is really not replicable, or it's not a strategy that we can really work out when you scale up, right? So that's how I think about things, and that's where I really got humbled, and I really stopped making buy cost as my core position, and just keep it simple, right? I just basically buy stocks, right? So what I did was I just cut my loss, and I converted all my stocks into I converted all my call options into shares. So I converted at about $19. So I was basically averaging down as well on the way, and I was also converting whatever value of my options into stocks, and I bought a huge ton of stocks at about $23 range. That's my average price, right? And now you see JD is actually up
$80.
Yeah, man. I mean, if you were to buy options, right, you have stabbed yourself in the heart, because you have closed off your position. You'll probably be scared, because I was facing like 80%, 90% loss in my option position, and it was huge amount of money, right? And from there, if I didn't convert it to stocks, I wouldn't have enjoyed the ride from $23 over to all the way to $80. Right? So that was one lesson I learned. And I think another thing that I actually learned in this entire saga was that, actually the power of selling puts is very, very powerful. Right? So actually you can sell puts at a very cheap price. So back then, if what we did was we sold puts at strike price $19, right? When the stock was at about hovering about $20. So the premiums we got were really pretty respectable. If I'm not wrong, let me think about it. So we were actually getting about a 10% premium, 10% premium for selling a 1-year put, right? So even if we got exercise, I'll be buying JD.com at $17 or $18.
Which is,
and if you look back, right, if I were to get exercise and I would buy JD at $17, oh my God, man, I'll be laughing my way to the bank. In fact, whenever I sell puts, I always want to be in the position where I will feel like, if I don't get exercise, I'll feel so bad, right? So in this case, in JD, right, if the fact that I didn't get exercise is such a huge loss to me, right? So whenever I sell puts, I always have this mindset, I want to get a stock, right? So some people sell puts and say, oh, I hope that I don't get a stock. That shouldn't be the right way, right? So that's how I actually complement value investing together with options, and that's how I actually propel what I call value add to my returns. But I always like to tell my community that, if you do not know options well, or, if you think that options are a bit too complicated, right, it's okay that, you don't do options and you just buy the stocks, right? You're really not missing out much. In fact, most of my members who, made multi-baggers on their portfolio, meaning their portfolio tripled this year. I'm not talking about just one stock, right? I'm talking about the entire portfolio tripling. It was because that, they really just bought stocks, and these stocks actually ran out really well for them. So think about it, right? Would you dare to put 15 to 20% of your portfolio into a thing that suffers time decay, that can really expire and lose value after 2 years? Or do you have more confidence to invest in something like stocks, right, an instrument that you can really just buy and hold all the way, right? Because you have done your homework, the chances of them going bankrupt is very low. So the only way that you can really lose everything through stocks is when the company go bankrupt. But if you really go through the framework, look at the debt, look at the cash position, you look at the earnings, right, it's very hard. I would say the chances of you choosing a company that may go bankrupt is very, very low, right? Of course, there will be black swan events, right? That is why we do portfolio sizing, right? So having that conviction, having that long-term mindset, right, that gives members or even myself that conviction to dare to hold companies for 5 to 10 years and just stick through, right? Even if JD was going through that sex scandal, I was close to, I was losing money, right? But I still dare to average down because I know stocks are permanent, right? If as long as I'm long-term enough, right, I will actually make my money. And I think the number one thing that most people think is because we are so trained by the education system, right? We think that if we put 1 hour effort, we'll get 1 hour of results, right? And it makes sense, right? Because last time, if we did 1 assessment book, probably that would get us our B. But if I do 2 assessment book, then maybe I'll get B plus. And if I do 3 assessment books and I finish all the 10-year series, then that would guarantee me my A. But investing is not like that. You can do a lot of hard work, right? So back then, when we were looking at JD, we did a lot of hard work, we did a lot of research, right? But it took 2 years for this company to quadruple, right? So it sounds very sexy, right? 2 years to quadruple. If you do your CAGR, your compounded annual growth rate, you are growing your money at a huge rate. You're growing your money about 2 times, 100% or 200% a year, right? And this sounds fantastic, but when you are actually looking at the stock chart of JD.com, right, that period where the stock went from $20 to $80, right, only took about 3 to 6 months. But in that entire 2 years, right, about 1 year and 6 months, the stock price is not moving at all, right? And we have to start telling our brains not to focus on the stock price, because sometimes we have this thinking that how come we put in so much effort but this stock is just not giving me the returns I want. That is not the right thinking. So I would say most of the time when people are not successful investing, it is because that their yardstick of happiness, right? How they define happiness in investing is through stock price. And think about it, right? This is something that is crazy. It's absolutely insane, because stock prices are stock price is a thing that is irrational, right? It is something that is not rational at all, and it's something that is something that's not logical, right, at times. So if you're basing on your happiness based on something that's irrational and not logical, don't you think that you go insane in the long run, right? Because if you're banging your happiness on something that's illogical and erratic, and so can you imagine? It's just like marrying a wife or husband. Let's not be sexist, right? I mean, guys and girls can be illogical and erratic and irrational, right? And you're basing your marriage. You think that you're marrying for the sake of marrying, and you think that you'll be happy, but this guy or girl is irrational and illogical. Then I mean, you're not being realistic here, right? Because let's be real, in this world, stock prices are not rational. So what is a better yardstick, right? I would say is to really be truly happy, right, when your business fundamentals improve, right? So I always like to tell my members, don't be happy because JD stock prices go up. That is absolutely, you're going to go insane when you do that, right? Because when you're happy, when the stock prices go up, when the absolute reverse happens, you're going to be very, very damn upset. You're going to be very, very damn sad. Right, but if you just focus on the business, right, even if the stock price do not move, but I felt genuinely happy, right? I look forward to every result. When JD was growing, they reported that they are helping during COVID, right? When they are reporting that they are actually opening more warehouses, more initiatives. They're actually spinning out JD Health. All these initiatives actually make me really happy, despite the stock price hovering and stagnating for a full long time, close to 2 years, right? So once you can actually switch that thinking and switch that source of happiness, right, you'll be a much better investor. Because think about it, right, when you're a stock investor, you're a business owner. And why do business owners get so rich over time? Why do Jeff Bezos become the richest guy on earth? Right, because Jeff Bezos is always thinking about how he can make Amazon's operations become better, how he can scale up. He doesn't look at the stock price. He doesn't look at the stock price and say, oh, my stock price is low today, therefore I will stop operating the business. Or, stock price is low, therefore I don't want to have meetings to improve my sales team. Right? So you really have to think yourself as a business owner, and you have to be happy. Right? So for example, let's say if you own Amazon, you have to think about, so if I'm a shareholder of Amazon, this is going through my mind. I'll be thinking about, imagine the globe, right? And how much people are sending their orders into the databases in the US, right? And you think about your fulfillment centers, so how huge they are. You have hundreds and thousands of staff working for you, getting the parcels out. Customers are happy. You get more sales. People are using their Amazon AWS, the data servers. So you have to think like a real business owner. You have to visualize it in your head, right? So this is what we do, right? And from there, right, once you can have this shift in your yardstick of happiness as an investor, that's where you're going to do really, really well.
Yeah, wow. Hey, that was so much value, man. Like, even I'm learning something. I think a huge mindset shift, right? I think when you say is instead of celebrating when the stock price goes up, right? Start celebrating when the business itself does well. Because I think right now, especially as of the time interview is doing, right? I think the stock market is doing pretty well again. And I see a lot of people started to get like happy and excited, right? But as much as I always tell people like, hey, it's time to be chill, is to as in like don't be too happy because that doesn't help. But I think I love that mindset shift. Is like only celebrate when the business does well, right? So I think that's something that's a huge point to do. I love what you shared about how a lot of people when they sell puts, right, they're praying that it doesn't get exercise. But for you, right, is if it doesn't get exercise, right, yes, you're happy that you get it, right? So I think that's a huge, powerful thing as well. And then I think lastly, when you talked about call options, right, 1 to 2 years is pretty short term because, hey, in 1 to 2 years, anything can still happen, right? A sex scandal, right? Something happens in terms of COVID and stuff like that. But when you do the truly long term, right, that's when your conviction, right? When you have conviction, you can really have unlimited holding power just by buying stock. So thank you so much for sharing, John. Right, so I want to move on to the next segment, right? I know you have been over delivering, right? So thanks so much for that. So how many students does Jim have right now, like in terms of number of students you guys have trained over the years and all?
Yeah, we currently have about 500 students here.
500, right?
Yeah. 2 years,
and many different countries, right? I know it started from Singapore, right? There's Malaysia, but I think recently you had some students in US, right? So wonderful, going global, right, you guys? So what do you think are some of the in your own observation? Because I know that different people have different interpretations, right? There's some common responses as well. But in your own observations, what are the differences in some of the characteristics and traits of some of the best students and investors versus some who are still struggling or still not able to get the kind of results that they want, right? In their own words.
I think students who really do well, they immerse themselves. They really put in effort to come for every tutorial. They are more driven, right? So rather than it being push notification, rather than we push information to them, their thinking is always pull notification. How can I pull in knowledge for myself? How can I learn more? And how can I really do it? So I think one thing about students who do really well is that they believe, they start to get small success, they take action, right? So once you take action, you get maybe 5-10% gains, you start to believe this works, right? When you first get your first multi-bagger. So I think in the industry, we are the first, and I would dare to brag because I think we're the only one. Out of 500 over students, we have about 70 to 80 students actually getting multi-baggers. Multi-baggers are basically companies that where our students
triple.
And they go more than 100%, right? So in the industry, no one really tracks their students' results. We are the only one who do it so rigorously, right? We even have this award that's coming up. It's called the Multi-Bagger Club, right? They'll get a plug for getting their first multi-bagger. And once you get a multi-bagger, you will realize that, wow, the possibilities are really, it is really possible. Right? So once you know that it's possible, you get that mindset shift that, hey, if now I can really, find a company that can really double or triple, right? And this is not a Ponzi scheme that we're talking about here. These are real listed companies, legitimate, listed on the SEC, gone through the Fed. These are companies that are legal, they have proper accounting systems, and these are companies that are really growing at more than 40%, right? Just think about it. If your company grows more than 50% for 2 years, right, your company revenues will kind of double, right? And therefore, when your revenues double, you're worth double more, right? The worth of company will double. So that is how our members are actually, making their multi-baggers. And, once you get that shift, right, then, it's very interesting because some people, when they come to us, they'll ask us, John, how much time do I need to spend in investing? And I ask them, if one day you can achieve multi-baggers, that, your companies that you research can actually double. Does it matter how much time? If I tell you 2 hours, but will you just stop at 2 hours and stop? I mean, if something works out and it really works for you, and you believe that it can work for you, and believe that you're destined for a good life, a good future, and in the long term, 5-10 years, you'll be well taken care of, right? Will you really, think about how much time or how many hours I need to set aside? In fact, if I'm the person, I know this works, I can make a huge ton of money from this, I will actually put all my time inside it and put all my efforts inside it, right? But of course, not neglecting the important things in life like your health, wealth, and relationship, right? So, so I just think that members who do really well, right? They have this mindset shift. They start to believe that they can really make it, right? Because think about it, right? Why do people not take action? Because they don't believe it, right? They can't see it. They can't see the vision. They don't see themselves being that successful person in that 1 year's time, right? So I always like to tell my members, right? Always write a dream card. Right, write a dream card. So what's a dream card? A dream card is something that you say, okay, for example, I want to achieve, or I want to retire my dad from a 7-day work week to a 5 days work week, right? So this is a non-finance goal. So you write down a non-finance goal, right? And you write, this is important to me because why? Right? For example, my dad has been working really hard, he's old. Because most people give up halfway because they don't have a strong why. Most of the time it's never about the money, right? Because if people do things for money, then it's just very meaningless. Most of people do, they want the money because the money can give them something that they need, right? So be it retiring, be it living the life they want, traveling, taking care of their kids, always be at home, be there for their kids' college education, college graduation or whatever, right? So write down why is that important to you, and you write down, to do this, I need how much per month, or how much passive income per month, and write down you'll do this by when, right? So give yourself a realistic timeline. And I always ask them to keep this dream card in their wallets. In fact, I can show you right now. This is not staged, right? I always have this dream card in my wallet here, right? So it can be something that's very ad hoc, right? So I put it on a poker card because back then I didn't have any cards that I wanted a sturdy card that I could put in my wallet, right? So, this card consists of my business goals, my personal goals, my finance goals, right, and my health goals as well. So, uncannily, right, I was actually I have a habit of writing my goals. And, one of my goals is to actually hit 1,000 YouTube subscribers so that I can, actually it's a milestone for me because I want to help get my work out there and, help more people stop losing money due to ignorant investing. And, I didn't think it was possible, to be honest with you, because I want to be real here, right? Because, to get 1,000 subscribers is not very easy, when you first start out, right? So I'm like, wow, crazy, man. When I'm just reviewing my goals, I'm like, wow, even though I missed my goal for like 3 months, I was supposed to get it earlier, but I still got it in the end, right? So it's really manifesting this law of attraction and visualizing how you'll be like, and to see, feel, and experience, right? Just close your eyes, how you feel like to achieve your first multi-bagger, how you feel like to achieve that returns that you always wanted, and just really visualize it in your head, right? And it doesn't matter if you don't believe in yourself, but somehow when you visualize and imagine, right, you manifest this law of attraction. And I think this is what really help members, right? So basically having the belief, and secondly, really putting the work into it, even though it may be hard, right? I realize that people who are very persistent, right, they actually do well. So we see some members who are, despite being a bit older, right, despite being in their 40s, 50s, 60s, or even have one lady who is 70, 80 years old, right? She's investing into SaaS companies, guys. Oh my God, can you imagine this? A 70, 80-year-old auntie who can be our
Wow.
grandmothers easily. Mark, we
Yeah.
are both in our 20s
Yeah.
or maybe early
Yeah.
30s. Can easily be our grandmother, right? She's investing into tech companies, guys. So if a grandma can do this, right, and you put in effort, there's no excuse that no one else can do, So it's all about that willingness, wanting to really do it. And, so once you know your motivations, you know your why, right, you put
Yeah.
in that effort, and, you really give yourself that belief, right? At least believe in yourself that you can do it. Then I think these three things is a very good success formula for people to actually succeed.
Powerful, man. Wow, I love that, right? I think because yes, it's about the strategy and all helps, but it's also about the mindset, right? And actually putting the work. Because I think one thing that really struck me about Jim that really stands out, right, in front of so many other programs. I mean, is you guys over deliver to the max, right? There's a whole Slack channel, right? And every channel there's about the stock, and you guys share so much, right? And then because there's a limit on messages, you put it on a Trello board, right? There's so much stuff going on, right? That is really about over delivering. So there's no excuse for people to say that I don't have enough resources to try, right? It's all about you putting the work and you having the motivation to keep you going, right? So anyway, John, so thank you so much for sharing. I think I can really feel your passion, right? I can sense the amount of the desire you have to really to help serve people. So I just end off with one last question, right? So it can be a mix of investing, it can be a mix of maybe a bit about business, right? Or entrepreneurship. It's up to you. But like for yourself personally, right? So this is for yourself personally, John. So let's say, right, if you had to lose all your money,
Okay.
right, you had to lose all your money, right, even your resources, your networks, right, but all you had is right now your knowledge at the moment, right, and you have an internet connection, right, for example. So like what would you do, right, from completely from scratch, right? In the first 30 days, from day 0 to day 30, right? While you lost everything you had before that, except maybe the internet connection, right? You still have food and water, right? And with absolutely no more like resources and networks that you have, what will you do in the first 30 days, right? To really get not only to bounce back, right? But actually go beyond where you are currently.
So again, no resources, no water, no connection.
Yeah, got water lah, right? Got water drink.
Okay.
So you still have some for necessary, but more from like your whether is it business or investing. What will you do, right? Starting from scratch.
When you say network, does my Instagram friends count? Or I lose all
No
my
lah,
Instagram friends?
let's just say no. Let's just say no.
Lose everything.
Just
Okay,
honestly,
great.
yeah, yeah.
Okay, what I will do is I'll go to Fiverr. I'll start putting my services online, and I'll show people how they can get results. I will restart my YouTube channel, and I mean basically I know roughly how to roughly do
go
it.
about, because you did it before, right? You can always do it again. Yeah.
And I start educating people, and from there, basically, when people start to make money and the coaching starts to go into motion, that's where I have some side hustle money, and I'll use that money to invest, and I will put all my money into one company that I am very confident in, and just one stock, because there's no point in diversifying when you have lesser than $10,000.
Okay.
Because you'll be eaten up by commissions and everything. So I'll just put everything. Let's say if it were to happen today, then I'll just invest in either, let me think, maybe DocuSign or CrowdStrike. I'll just put my money there, right? And I'll put it up until $10,000 and I'll hold 3 stocks. Right, and from there, that's how I rebound. Maybe I will not take 30 days to rebound. I don't think I'll take 30 days to rebound, because what has been built for 2 years, it takes time.
Yeah, of course.
Yeah. So
but I guess it's the steps,
that's how
right?
I rebound.
Yeah, but I love it. I think it was a very it's simple, right? It's simple. I think sometimes people love to overcomplicate things, right? It's about building some active income for yourself, right? Side hustles, right? Fiverr, right? But at the same time, I love it is because you say I want to restart my YouTube channel, but that's more for a long-term thing, right? You get to document, you get to share your learnings, right? You get to give value, right? Wow, right? Hopefully down the road you can hopefully monetize, right, on some level, and then of course to invest using your source income to invest. So I love it, right? So so with that, I think we end the interview. So John, any last words? Can we share a bit about your YouTube channel, right? So I've been following it. I love it, right? You got your 1,000 subscribers in a pretty short period of time, I would say, right? Just share a little bit, maybe a bit of a teaser of what you have right now in the content, and maybe for what's to come as well, right? And any final words where they can find you and stuff like that.
So basically, you guys can find me on YouTube, right? youtube.com/investwithjang. And I think I'll pass Mark the Telegram group that we have, which we actually give so-called stock alerts. Basically, we let people know what companies we are looking at. In fact, this is the Telegram group that has made, I think, almost close to half of the people in the group. We have about 2,000, so about 1,000 people made money on CrowdStrike. CrowdStrike, basically, we talked about it when it was $100, now it's about $140 over dollars. Obviously, past results do not guarantee future results. Yeah. But I mean, stay with us long enough, have that little leap of faith. How I think someone who is new to investing can actually should do, right? Open a brokerage account, right? Get started, because without brokerage account, you can't do anything, pretty much anything. Get your brokerage account from whichever country you are. Just Google it. You guys can resourceful. You know how to do it, and go to the YouTube channel. Watch the videos that I've done, right? And just take maybe something that you can afford to lose, right? And just dip your toes in investing and just start to invest, right? It doesn't have to be, I mean, the videos or ideas that I share is not really a recommendation to buy or sell. It's more of like educational purpose, but I do not hold back on my research. I do not hold back on what I've bought or what I sold, right? I really just want to share with people, just like, how I share with my close and personal friends. And, even if you do not follow the companies that we cover, it's fine, right? What you can do is, you can just consider buying the S&P 500, right? Just dip your toes in the stock market, have a feel of the volatility of the stock market, right? From there, gain some confidence. Even if you lose money, it's fine, right? You're losing small money, rather than, next time when you have $1 million and when you're rich and when you invest, you lose big amount of money, right? So always fail small and win big, right? So that's what I always tell people. Don't always wait for the right time. There's no right timing. The right timing, the best timing is now. And I always like to tell people what I've learned. So basically, I went to China. I actually met this CEO of China Maple Leaf. So what they do is that they are actually high schools in China that specializes in helping Chinese students to go to the top Ivy League schools in the US. Right? And his name is Sherman Jan. And Sherman actually shared with us that, actually to be successful in life, you just need to focus only on one thing, right? Do that one thing and do it really well, and just devote your entire life into that one thing. And just focus on that one thing, do it well, and you'll be successful in life. And I just feel that it's so underrated, right? Simplicity is so underrated. So many times you want to do so many things, right? So my best advice is, if you do not have a capital, right, just go and hustle and get your side income, get your active income. Because seriously, there's no way to make a fortune overnight unless you buy the lottery ticket, right? So if anyone tells you that you don't need to save, you don't need to earn side money, it doesn't need time, then I think you have to be very careful, right? You have to keep your wallets and just be very careful. Because truth to be told, take time, right? Just go do the calculations on the Excel sheet, right? I believe you guys are actually a very smart bunch of audience. I mean, Mark's a smart guy, so I believe all of you guys are smart as well. Smart people follow smart people, right? And figure out what's the best instrument for you, right? What's the growth rate that you need to actually grow your money and be free within 10-15 years. If you guys need help, right, my YouTube has a video to guide through you what's your magic number, right? So that's how you can actually use the resource from my YouTube channel and also my Telegram group. And my advice is, just find that one thing in life that you absolutely like and you're passionate about. Don't start a business for the money. It's not sustainable. I just can't think of doing something I hate just for the money for 2 years, 3 years. It's just hard. Find something that you're very passionate about, you're good at, and just focus on that one thing, right? Even if that thing is not investing, it's fine, right? Because there's many ways to be successful, right? You don't have to do it just through investing. There's so many roads to Rome. Yeah, so that's just my ending note for your audience.
Oh, it's wise words, man. I think someone coming from like your age, bro, I think it's wonderful, right? How far you have grown. I've seen you, right? And I'm so excited for what's the next phase for you and Jim as well, right? So with that, guys, we end off the interview. I'll see you for the next edition of the Master Mentors interviews, right? So thanks, everyone. Bye, guys. Thanks, John.
See you guys.